All right, welcome everybody to today's webinar as we discuss the basics of nonprofit grant management. My name is Kristen Biermeyer and I'm the Digital Marketing Specialist for Wegner CPAs and your moderator for today's webinar. During the presentation today, if you have any questions, they can be submitted through the Q&A feature at the bottom of your screen. I'll be keeping an eye on that and we'll try and answer your questions as they come in. Otherwise, James has also left room at the end of the webinar to address any questions. The presentation today is being recorded and it will be emailed to you along with the slide deck after today's event. If you are looking to receive CPE credit today, please remember that you will need to answer all three of the poll questions that will be launched during the presentation, as well as fill out the webinar evaluation that will be included in the follow-up email that you'll be getting with the recording. With that, our speaker today is James Conrad, and he is a supervisor here at Wegner CPAs. James, I will turn things over to you.
All right, thank you so much. Hello, everybody. My name is James Conrad, as mentioned. I am with the Accounting Services Group here at Wegner CPAs. I have been doing nonprofit accounting for the better part of 7 years, and I remember that easily because my last day in my last career was when my second son was born. I live in Oregon with my wife and 2 children, both boys, 10 and 7, and as you can imagine, they're a handful, and a chunky orange tabby cat. So today we are going to be going through basics of nonprofit grant management. We're going to be covering kind of a 30,000-foot view. We're going to look through some things you may not know or may not be familiar with, and we want to give you a taste of everything. So progressing. Let's keep it as simple as we can. All right, so some of the things we're going to be going over today. How does my organization apply for grants? Grants can come from many sources, and we're going to take a look at those. What information do we need to report? Grants require reporting. You can't just take the money and run from your funder. Many of them are going to want to hear what you did with the money. What requirements do we need to meet? There's hoops to jump through when you receive grants, and we're going to be talking about that today. And the big dreaded A word, will we need to get an audit? The answer to this question and to many accounting questions is maybe. If you've had these questions today, we aim to help you answer them. So today's objectives, we're going to identify and analyze various types of grants available for nonprofit organizations. We're going to define grant reporting and compliance requirements. We're going to discover and compare grants that work for you and your organization. And we're going to distinguish the ways grants can trigger reviews, audits, and tax status changes for an organization. Grants can be so mystifying, but at the same time, I aim to break it down to more manageable chunks for you. So, to basics. What's a grant? We got to start somewhere. Grants are funds given from one entity to another for a public benefit. And they're usually given to a charitable organization or a nonprofit. They are not expected to be paid back, meaning they're not a loan. And they come in different forms from different sources. Grants are kind of nebulous. They are kind of a thing that they can be a wide range of sources. They're not really a cut and dry thing, but for the most part, when you think of a grant, you're receiving money that you're not going to be paying back and you're going to be using for some purpose. So now that we know what a grant is, let's look at some sources. First, we're going to start off with the simplest one, the individual donor. You and I could be an individual donor. We often think of philanthropists out there that have lots of money and are going to be giving it away. Or in today's world, you're going to be seeing a lot of memorials. Sadly, for the world that we're living in, we're unfortunately seeing loved ones pass from the pandemic, and often you'll see memorials that are requested from the family in obituaries that will say, please donate to XYZ company. Sad, but it is a fact of the matter right now. There's foundational donors, giving funds and endowments, and that endowment word can be pretty scary and daunting for some people. We're going to be speaking about those here in a little bit, but we also have corporate donors, donations straight from for-profit entities. Let's just imagine that you work for Pfizer. Pfizer has a lot of goodwill right now, as does Moderna and Johnson & Johnson. If you want to increase that goodwill a little bit more, how about a nice donation written out to a nonprofit? Would go even further. And of course, government grants, local, state, federal, you name it. If there's a government entity, there's probably some funding to find. And government funding can be easy, difficult. The spectrum is wide ranging on that, and we're going to talk about that here in a little bit. So first, we're going to talk a little bit about the individual donors. It's pretty simple, generally the most simple type. A person identifies with your mission and wants to donate. They want to fund the mission. They write you a check and you thank them. Do keep in mind that there is the $250 threshold for the IRS donor acknowledgement. So make sure you're sending out your thank you letters for the donors that hit that threshold. But if you think about it, some parts of the mission identify with people more than others. So there are going to be restrictions sometimes. Restrictions can come in many shapes and forms. While the donor may just say, use it for wherever you want, that's great. We always prefer that sort of funding. But at the same time, there may be restrictions where you have to use it for certain purposes or in a certain time frame. And make sure you follow those instructions, because if you fail to follow their instructions, the donor can take back their donation and can ruin your nonprofit's reputation in the community. If you don't follow through on what you are told to do, it can be a very, very rough situation for your company. So looking at foundational donors, foundations come in various forms. So as I mentioned, the wealthy philanthropists before, oftentimes they will have their own private foundation. Private foundations are a sector of nonprofits. They are treated a little bit differently compared to the traditional 501c3s. They have a different tax return, but often there will be some tax benefits with that, and we'll look at those in the tax section today. We also have foundations that are pooled resources for multiple donors, and the example I like to give in the Madison area, many nonprofits work with them, is the Madison Community Foundation, where you'll have donors coming together and you'll have funds that are administered by the Community Foundation. And then one of my personal favorites, as I am an avid Brewers fan and it is a great season right now, they're charitable arms of for-profit entities. So I like to give the example of the Brewers Community Foundation, Green Bay Packers Foundation, now that we're into football season. They have ways of sending out their funding. At the Brewers game, if you've been to American Family Field, you'll see the 50-50 raffle ticket sellers around. They are gathering funding for the Brewers Community Foundation. They split the pot with the winner. 50% of it goes to the winner and 50% goes to the Community Foundation. So foundation grants can come in many forms, such as one-time gifts, as we're most familiar with, or permanent endowments, something that is supposed to be held in perpetuity that has special regulations with it. Corporate donors. So for-profit companies can donate to nonprofits. The biggest benefit to them would be lowering their income tax burden. And honestly, it does increase their community goodwill. Frequently, you will have also the charitable arms of the corporations. They'll have their foundation types, but you can donate directly from the corporation. And then frequently for many employees around the area, companies will partner with a company like United Way or community shares with the paycheck deductions and easy ways for you to have a pass-through where money is collected from you and is given to your charities of choice. And finally, let's look at the big one with government grants. So frequently what I've seen, and you may have had experience with this, is that they're given to companies that provide services. I worked with companies that run drug rehabilitation programs, homeless and hunger relief, and going off in a different direction, wildlife rescue and forestry conservation. If there is a mission that the government departments, such as the Department of Defense or the Department of Agriculture at the federal level, they want to go and solve, they will partner with various nonprofits across the nation and give them funding to commit to the mission. So sadly, as we see with the upcoming debt limit discussions, there's often limited funding for some of these. Budgets are followed at the federal level, especially where there's just not that much money to go around. And there are other nonprofits in the area or across the nation, if you're working with federal dollars, and you have to compete with them. You have to make your case of why you would perform the work the best way and possibly the cheapest. Another string attached with it is that government grants frequently come with stipulations like match. And if you've dealt with match before, it can be troublesome to track. So it's important to know that when you're looking for a government grant, you're not going to bite off more than you can chew. And they also have a higher likelihood of requiring an audit. Audits not necessarily come with government dollars. There are some thresholds that we're going to be discussing later. However, there is an additional likelihood of necessitating review and audit, especially with federal dollars and the Single Audit Act. We'll get to that here in a little bit. So when we think of types of grants, what are their purposes? General operational grants, meaning you can just use the dollars for whatever you would like. Capital campaigns, do you need a new building? Do you need a remodel, or do you need to update some of the improvements that you've made to your building? Technology, do you need to improve your computers, your IT infrastructure? Do you just need to have additional security? Grants for that. Disaster relief, as we've seen down south with Hurricane Ida and other storms in the past. There are disaster relief grants for weather-related natural disasters. However, if you think about it, there were disaster grants associated with the COVID pandemic. Those were made available to places like restaurants, the Restaurant Revitalization Act, or the shuttered venue grants for places like theaters. The SBA, the Small Business Administration, federal branch of the government, also offers, business startup funding, grants for businesses that are just starting out. So if you think about it, grants can be for virtually anything that a donor wants to fund. And all you have to do is find it and get it. So now it's question time. We have poll number 1. Your nonprofit provides drug and alcohol rehabilitation services. A local philanthropist lost a family member to a drug overdose and wants to donate funds specifically meant for your residential treatment program. Are they allowed to tell you how to use their donation? Option 1, yes. Poll popped up right in front of me. Yes, donors may tell recipients how to use their donation, or no, we may use their donation as we see fit. So we'll let that roll here. can you use the donation as you see fit? Can they tell you if you're allowed, or are they allowed to tell you how to use their donation? All right. And the vast majority of you, you are correct. Yes, donors may tell you how to use their funds. That is called donor restrictions, and it is a commonplace thing that you will see in the nonprofit world. So we need to have an aside here about exchange transactions versus contributions, because they have different accounting treatments. And I'm not going to get too far in the weeds here. I just want to note that there is a different accounting treatments for different talk about exchange transaction versus contribution. Exchange transactions are purchases of goods and services from another company. It's just as simple as thinking when you go to the grocery store, you have an exchange transaction with Woodman's or Pick and Save. You give them cash and they give you food to eat. The nonprofit in this case provides the good or service for something or someone that is defined. So it could be funding the homeless programs or the hunger task force programs, something like that. The service is provided for the money that you are receiving. And then exchange transactions can be in both public and private grants. Fund you to do it. Contributions are different. Contributions are a transfer of assets that is voluntary and non-reciprocal. Ooh, a mouthful. Voluntary just means they are freely given, and non-reciprocal means you're not going to be receiving something in return. Services are funded by contributions are not necessarily defined. Nothing is expected in return to the donor other than fulfilling a purpose obligation. So if they are expecting you to use it for a certain thing, they are not expecting something tangible to be returned to them. However, they can still have you use it for a certain program or purpose. So, as I mentioned before, the accounting treatment of an exchange transaction and contribution is different. Contribution revenue is fully recognized unless there's a condition, and we won't get too far into the weeds there, at the time of the donation or promise to give, even if not expected to arrive for several years. So if you have a contribution that has been announced, you received a letter saying, congratulations, we're going to give you a $500,000 grant on July 1st every year for 5 years, you'll be receiving $100,000. That $500,000 is acknowledged right away. You keep in mind that the accrual basis of accounting says that even though you haven't received it, it's still a donation. So it's sometimes difficult for budgeting purposes. You may have a gigantic surplus in a prior year and be running a deficit subsequent years because you are not getting additional revenue, but you are getting additional cash. And that is something to think about during budgeting season, that it's okay to run a deficit if you have taken money in a prior year and use it to spend it. Exchange transaction revenue is different. It's recognized as the revenue is earned, meaning when the good or service is delivered. So if you're providing the homeless services and running a men's shelter, for example, having that shelter open, having members of the community come and stay there, that is earning the revenue. And yes, there can be a gray area if determining if a grant is an exchange transaction or a contribution. I've had that come up in audits in the past, and that is usually a discussion to have with the accountant. So, compliance. We have to follow the rules. As I mentioned before, that donors can impose restrictions on the purpose and the timing of the use of their grant. So you'll often see in financial statements the with donor restrictions and without donor restrictions on nonprofit statement of financial position. It's down near the bottom of that page generally. And many nonprofits will just have without donor restrictions. They have had no donors tell them to use their donations in any specific way, nor have they had any grants that have required a specific purpose. And you'll have the entire section as undesignated. However, in this example here, you'll see a with donor restrictions for Teen Clinic, a company that I've worked with in the past, had a donor gives something specifically for the Teen Clinic program of this company. We keep track of those funds. As the funds are spent for the clinic, we whittle away at that balance. However, if there's some left over, the donor hasn't had their purpose restriction fulfilled, and we'll be keeping track of that on the books. So for purpose restrictions, the grant can only be used for a certain program or may not be used for overhead expenses. So some government grants only allow you to charge a certain amount of admin costs to that grant. Frequently with Dane County Human Services, I've seen anywhere from 10 to 20% of allowable admin costs. Those are things that you need to be cognizant of when looking at grants and if they're reasonable for your company to fulfill. And then time restricted is just that. The grant may be used at some point in the future, but they are giving the funding now. Government grants are frequently donor restricted. They want you to use it for a specific purpose, specific program, specific need in the community. As I mentioned, only a certain amount of overhead can be charged to it, your admin costs. And performance of grant-based activities are put in a specific time frame. They want you to accomplish a certain amount of meals delivered within the next 6 months. They want you to service this many of the homeless community in the next year. They will lay all of that out to you when the grant award is awarded. So you've probably heard in the news at some point in the past about endowments. Oops, go back 1 minute. There we go. So let's talk about endowments. Endowments are donations of money or property made to a nonprofit, and the resultant investment income is used for a purpose. Frequently, the principal, also known as the corpus of the endowment, may not be used. It's not all of them, but it's frequent. While the nonprofit owns the endowment, in practice, they do not control the use of the endowment. So the donor has imposed the restrictions on the use of that donation. So while the company owns it, they do not necessarily control it. You'll frequently see them at educational and cultural institutions like colleges and museums. And when I was doing my research here, there was a kerfuffle with Harvard. So Harvard had applied for coronavirus aid. But then there was outcries because Harvard has a large endowment. If I recall, it was, they were eligible to receive $25.5 million. However, the university's endowment is valued at $41.9 billion. So as you can imagine, people hear that Harvard has almost $42 billion. Why are they asking for pandemic aid? Well, if they are not able to control $41.9 billion, they would be violating their endowment rules, and the donors would be not happy, to say the least. So I looked at the Harvard website to see what they talked about in their endowment funds. And they said, as one of their FAQs, are there constraints on endowment funds? Yes, they have more than 14,000 individual funds, the majority of which are restricted. This means that the donors have specified that their gift must support a particular aspect of the university's work, aka purpose restricted, from scientific research to named professorships and dedicated scholarships. So they have had alumni or other philanthropists donate to them, set up a scholarship fund in their name, and there it is in the endowment. These philanthropic gifts are critical to many areas of our work, each with a unique person and story behind it. So you can't just go into your endowment and say, oh, we got to plug this budget hole. We'll just take it from the endowment. Nope, that will cause trouble, a large amount of trouble. As an aside, I wanted to talk about religious organizations and donor restrictions. For any of you that are working with churches, you have the collection plate. Often that is just general funds that gets passed around during services. Tithes and offerings from congregants are not exempt from donor restriction and tracking. Meaning, if a member of your religious organization says, I'd like to give you a donation, but I'd only like for it to fund the annual kids mission trip. Yep, you still have to make sure that that money is spent on the mission trip. Restricted donations are common and frequent. So nowadays you'll see special collections for overseas mission work or disaster relief. As I mentioned, IDA, a church I'm familiar with, has just took up a collection for disaster relief to send down to New Orleans. But then there's also the regular ongoing restricted funds, and every church I've ever worked with has the flower fund and the building fund, and you'll have these funds set up that are restricted, and they're only meant to be buying altar flowers or paying for building updates or maintenance. You still have to follow those even though you're a religious organization. And I've come across it in the past as well. Churches with poor fiscal practices often lose track of their restricted donations. The donor could come back and request the money back. Frequently, you'll see with churches that they have an older contingent of membership. A lot of them will let it go. However, it is their prerogative to ask, well, what happened with my money? What did you do with it? And I've seen this before as well. If you're not using their money right, they're not going to be giving you money. And that's not even just restricted dollars. That's all dollars. A church that has poor fiscal practices will not be getting money in the plate on Sunday. Simple as that. So when looking at donor restrictions, as I mentioned before, on the financial statements, net assets with donor restriction are presented on the statement of financial position. And if you're familiar with for-profit entities, that's also known as the balance sheet. So here, Teen Clinic shows up with the balance of $33,000. There's nearly $34,000 of funds still waiting to be used for the Teen Clinic, and the remainder of their equity is undesignated without donor restriction. And then the change in net asset line here is basically equivalent to the annual profit or loss. So just to make sure everyone's clear, net assets are what's left over after subtracting what you owe from what you own. So you have assets, things that you own, liabilities, things that you owe, such as accounts payable, credit card bills, loans. When you take your assets and subtract the liabilities, that is your net assets. that is the portion of what you own. So let's talk a little bit about grant reporting. As I mentioned before, every grant has a donor that's different, and it's going to have different requirements when it comes to reporting. A grant from an individual may only necessitate the previously mentioned IRS required donation letter, $250. Frequently with individual donors, they just want to give to your mission and you send out the letter and it's a-okay. But things like government grants require specific forms and formats. The picture here is of the federal SF-270 form that are used for certain government grants. Each level of government, local, state, federal, often have their own types of forms. Make sure you're using the correct types of forms for your reporting. If you're not in compliance with the grant reporting, and you can get in trouble for that. In the future, and we're going to go over this, I'm going to reiterate it several times. The grant contract is going to be the most important part of your grant process. So if you have grant reporting that's cumbersome or that is going to really bog you down with some of your staff members, the grant may be more trouble than what it's worth. You may spend more on admin tracking than what you would get in the grants itself to provide the service. And that could be a drain on your company. So you have to be cognizant of the fact that this grant may not be right for you and you can pass it by. So we have question time number 2. We're going to talk about our local philanthropist again. Your nonprofit received a large donation from a local philanthropist summing $500,000 in various stocks they owned. The donation is placed into an endowment and stock dividends accumulate in a related money market account. The donor says you can spend the profits on wherever the greatest need is. What is an acceptable use of the endowment? 1, sell all of the stocks and buy a new building. 2, use the dividends to fund your programming. Or 3, take out some of the stocks for a desperately needed new company van. We're going to let that roll here for a few moments. What can you use the endowment for? Sure, I'm taking a look here at the chat. Okay, just a couple more moments with the poll question here. Okay, so we have a couple of people that went down to the take some stocks out for a desperately needed van. And while I understand the desperately may have thrown you off a little bit, the answer is use the dividends to fund your programming. More often than not, you'll see endowments that are quote unquote permanently restricted. In prior years, you may have seen permanently restricted, temp restricted, and without restrictions in the net asset section. Those have been reduced to with or without restrictions. The endowment, the way endowments are frequently set up is you will have the corpus set aside where it will make money in the market, make interest, and you can kind of skim off the top there and use that for your programming. So you could reach out to the donor and see if they would allow you to tap into some things. However, more often than not, the donors want it set up into perpetuity for you to use going forward. So There we go. So let's take a little bit of a recap here. Gone over a lot of information. So as I mentioned, grants come from many sources, public and private. Grants come in various forms. Each source can have its own restrictions on use of the grant, and each source can have different reporting standards. And there is a different treatment for grants funding an exchange transaction versus a grant that is a contribution. So now that we've kind of gone over some of the basics, let's become a little more grant savvy. I'm going to say this once, I'm going to say this 1,000 times. The grant agreement is your rule book. You have what you need to report and what you need to follow. Your guardrails, so to speak, are in your grant agreement. It'll tell you the purpose, how to fulfill the purposes that were sent out, how you may have to provide a good or service. The donor can tell you how to do that. It'll give you deadlines for reporting and deadlines for spending. You need to spend it in a certain window. And what forms you need to use to submit for proper funding or reimbursement. Read. You can't know your grant agreements too well. You should just know them inside and out. Knowing the rules for your grants is imperative for your nonprofit. Read. Another thing to look for is requests for proposals. You'll often see these with government agencies that are following a budget. It's a request for a proposal. An RFP is a solicitation from a donor looking for goods or services from a specialized source. So for example, if you have that drug rehab clinic, the city may partner with you for detoxification services. That's not something they can provide, but they will look for entities in the community that can provide that service on their behalf. It'll often lay out the pricing and the methods, some historical information, and it'll look for some prior experience when you're applying for the RFP. So you'll see, as I mentioned, the RFPs for specialized services, the alcohol and drug detox, the homelessness reduction, but also public works projects. When you see those orange barrels out there, you'll think to yourself, hey, was there an RFP involved? Nobody likes dealing with those. And if any of you have driven through Oregon lately, that's rough. It's also a competition. You're competing with other nonprofits out there. Often you'll have a scoring system. The requester will look at the cost. Got to keep it within the budget, but they'll also see what you've done in the past with experience. How much experience have you had running these programs? Are you capable to handle the amount of people that they want to serve? And they'll want to see if you're based locally. That may be a tiebreaker where if a company out in the world provides the services and they're very widespread, whereas maybe a smaller nonprofit that doesn't have as wide of a reach, but is locally operated and held, they may want to go with something like that. It's all up to the RFP. So with these RFPs, beware of scope and reporting requirements. As I mentioned, don't bite off more than you can chew. So think to yourself, my nonprofit can perform the services, so we do what they're asking for, but can our admin team or our accounting team handle the reporting? If there's report after report after report, or you don't have a good tracking system in place to report on these programs, you may want to pass them by. And then RFPs, as I mentioned, often look at costs, but is your pricing too low? Are you undercutting yourselves to secure this contract? You may end up losing money on something you thought you could provide for $100,000, and they gave you $100,000, but then by the time you went through labor and supplies, it ended up costing $200,000. That's not a recipe for success. So now let's look at different funding structures. There's different ways that you could receive the money with your grants. So there's reimbursement grants. You perform the work ahead of time, you see how much it costs, and you tell your funder how much money you need back to make up for it. There's also grant advances, where the funder will give you all of the money up front. You haven't earned it yet, you kind of hold it off to the side, and you perform the services as they come up. There's also timed payments, much like if you think about your mortgage payment, it's generally the same every month. The grantor may say, I'm going to give you $5,000 a month for 12 months to get to the full $60,000 that I would like to give you for this program. That's a-okay too. So if you think about it, nonprofits will have cash flow issues occasionally, especially if they do reimbursement grants frequently. If you're fronting the money up front, you hopefully likely have some donors that are giving you unrestricted dollars to use on a frequent basis. If you're strapped for cash, you should probably stay away from reimbursement setups. Employees like to be paid on time. I don't know if you know that, but people generally like to get their paycheck. So if you're having cash problems, maybe shy away from the reimbursements. Bold. I wish I could make it flash and be a little garish. Read your grant agreement. Just make sure you know it. Not knowing what was expected will lead to adverse results. The agreement tells you what, when, and how. It's your guardrails, it's your rule book. It will tell you what you need to know and what you need to do. And then successful nonprofits have experts on the rules and regulations. Often you'll have a grant writer, you'll have somebody that knows the ins and outs of government reporting, somebody that's had experience with it in the past. They are an incredibly valuable tool to have available at your disposal. A good grant expert can really go a long way. As I mentioned before, don't bite off more than you can chew. The scale of your staff should be part of the decision when you apply. So if you only have one accountant and maybe a front desk worker and you're going to be applying for a $750,000 grant, may want to reconsider that. And then any grant award can trigger higher level accounting needs. So it's not necessarily just the government grants or foundational grants. Any donor, no matter the size, can make a requirement that your books are reviewed or audited. I've worked with a museum in the past that had a donor for their capital campaign. He made a donation of $100,000 to the capital campaign. And as we will see the thresholds in a little bit, that did not bump the recipient over the limits for reviews and audit. However, the donor themselves requested it and they were obligated to go through with the review. So let's look at taxes, reviews, and audit. So for taxes, many of you will be familiar with Form 990, and there's different Forms 990 for different thresholds. 990N is often called the postcard 990 for gross receipts under 50,000. And then from there, we have the EZ, which is gross receipts less than 200,000 and total assets of $500,000 at the end of the year. Mentioned previously as well as the 990 PF, the tax return for the private foundation. And then the 990 T is for the unrelated business income tax. For something that falls outside of your mission, you have to pay tax on certain things that are not meant to be performed by your organization. Things like advertising and certain sales. For Wisconsin specifically, Wisconsin reports are required that are similar in form to the 990. However, they are a little bit different, and that's something to address in a different tax location. So for things to consider, as you saw the dollar thresholds, will my organization move up to the next level of 990? Each level of 990 is a little more complex. It requires a little bit more reporting. And if, again, with staffing needs, if you don't have the staffing, you may want to think about what that's going to look like going forward. Is this grant going to be a new significant activity? Is this a whole new program? Is this something that we need to hire additional labor for performing the activities? Could the activities result in unrelated business income tax? If you're performing something that is normally performed by the for-profit community, that can lead to the UBIT, the unrelated tax. So for reviews and audits, and this is Wisconsin specific, each state is going to have different rules. Wisconsin has dollar thresholds for reviews and audits. So if you have $200,000 of contributions, your organization is subject to a review. A review is a less stringent audit, so to speak. $500,000 of contributions is an audit. So contributions, if you think about when you receive money in, when you're receiving that money in, you're going to be accumulating all of those funds. When you have government grants, that does not apply to the threshold. The review and the audit must be performed by an independent CPA. So for example, if Wegner does your books, we can't do your review or audit. We, in the CPA community, there's something called independence. You basically need somebody that does not know the accounting process or the numbers for your company, and they need to come in and look at things and make sure everything is on the up and up, both compliance wise and dollar wise. And as I mentioned, other states will have different requirements. Make sure to check if you're operating in these other states, what kind of requirements we're looking for. And then at the tip top federal level, there's something called the single audit. If you have federal dollars, there's a chance that you will hit this threshold. I personally have just finished a company that went through a single audit. The rules were set forth by the Single Audit Act of 1996. So it's aggregated spending, not necessarily receiving, but spending of $750,000 of federal assistance in a year. So once you hit that threshold of your program spending $750,000 aggregate, so it could be multiple programs, that triggers the single audit. And the goal of it is to provide assurance for good use of federal dollars. They tend to be very compliance heavy, the auditors will dig deep and they will dig far. So poll number 3. All right, you are the pastor of a local church. While the parking lot is filled on Sundays, it is virtually empty the remainder of the week. Since your church is in the city and parking is difficult, you decide to open your lot on the weekdays to commuting workers. What are the tax implications? 1, none. We're a church, we don't need to pay taxes. 2, we'll have to pay taxes, but at a reduced rate compared to the private parking garage down the street. Or 3, we'll have to pay the corporate tax rate on the profits of the parking spot sales. So let's take a look at question number 3. Go ahead and vote with your answer. And I see the questions coming through on chat. We're very close to question time here, so I'm going to hold off on answering some of those until the very end. All right. What is going to happen with the parking spots? So the clarification for the question here, and it looks like we've just closed it. I was meaning just kind of overall with this hypothetical. So this one's a little more split than the prior ones. I envy the people that's answered none. Sadly, no, it will not. There is a tax implication, but it's not at a reduced rate. It is at the corporate rate. So the corporate rate is higher than what you may anticipate for personal income taxes. The unrelated business income tax is meant to discourage nonprofits from competing with for-profit companies for the same business. Nonprofit companies are advantaged with their nonprofit, generally their nonprofit taxes. So if they're ending up paying taxes on the services they're providing, it's possible that the for-profit would, in effect, pay fewer taxes on that with their various deductions compared to what the nonprofit would pay in taxes. In the event that your company has a possible unrelated business, talk to a tax professional to help you with that. So we're going to do a quick review as we wrap things up. So organizations can apply and receive grants from many different places, individuals to government. The information that needs to be reported to the funder depends on the grant agreement. Read that grant agreement. It's crucial. Each grant will have different requirements, possibly including things like match or be restricted to specific programs. And there are dollar thresholds and grant requirements that will determine a review or audit. And there are very rigorous rules for certain large federal awards, the single audit. So it's question time. I'm going to take a look at the chat here, and I want to answer some of the questions that have been posed so far. So Tanya asked, how do we start the negotiation process for an indirect cost rate for federal grants that is different than the de minimis? I personally haven't dealt with that personally, Tanya. I would say it would begin with the funder themselves and see if there is some wiggle room on that. All those negotiations would take place prior to the execution of the grant agreement. My answer to that would be talk to the funder. So Kendra asks, so PPL grants will not require review. I'm sorry, I don't know that that acronym off the top of my head. If anybody knows, go ahead and send a message. Brenda Conkle has asked, is ARP funding that comes through the city or county counted in the federal funds? So that depends on the agreement. Often I've seen that if the funds are administered from the city or the county, but they receive the funding from the feds, meaning that the city or county is a pass-through, it does not count. But again, this is where the grant agreements come in very clearly. For question 3, I'm sorry about that. Are they planning to charge a fee for the parking? Yes, that was the implication there. And I'm sorry I didn't make that a little bit more clear. They were planning to charge for the spots. Kim asks, will the PPP loan trigger an audit if it was over $750,000 between the first and second draw, if both were forgiven within the same year? That is a good question, and I do not know the answer for that off the top of my head, and that is something I will have to look into. The PPP program itself was such a spur of the moment pop-up that there are still rules and regulations being issued on it, even to this day, almost 18 months after it was put into place. So that is something I will look into for you. Courtney asks, can you explain a match? So match comes in different forms. The best way I can explain it is that, let's just say you have a donor that says, I will give you $50,000 if you also raise $50,000 of somewhere else. Do you have another donor that could give you additional funding? That is a match. You may have to provide services that are also matched. So if this is funding $100,000 of services, they may require you to take 20% of that and fund an additional 20% of those same services with your own money. It's just another condition that some grants make you do. I've seen it frequently with HUD, Housing and Urban Development. Many government grants will have that as well. Okay. From Wholehearted Bookkeeping, how do I make accounting entries for restricted versus unrestricted? i.e. you get a $150,000 grant, 100,000 this year and 50,000 next year. You would enter the $100,000 into assets without donor restrictions and 50,000 into assets without with donor restrictions, and then move them on the first day of the new year. That is something I don't want to get too far into the accounting transactions with these during this, but that's something I could answer for you off to the side. Kendra updated the PPL, payroll protection loans. So the PPP loans. So let me refer back to that prior question. So as I mentioned before, I need to double check on the PPPs to see what kind of audit trigger they would have. I don't want to give information that could be wrong, so I'm going to defer on that one, and I will look into that. Can 501c7 organizations, Emma asks, donate specifically to a 501c3 foundation for the foundation's building fund? I am going to 501c7s. I haven't personally dealt with C7 organizations too frequently. That's another one I'm going to have to look into. Good questions. I have for all of these questions, I do have the contact information for all of you. So Kristen, do we have these names saved somewhere that I can respond?
Yes, James, if anybody's questions are in the Q&A feature, we have those saved, and you are certainly able to follow up with all those folks after the event today. I see that there's quite a few wrapping up in there. And if anybody has questions, we are running out of time today, but if anybody has questions that haven't been answered yet, if you could just quickly type those in the Q&A box, not the chat box, but the Q&A box, and we'll be sure to follow up with you after the event.
Yes, absolutely. Good questions, everybody. I'm really happy to see that this is spurring some good conversation. And then Wegner's own Amanda, who is a wonderful member of our tax team, says in Wisconsin, since they are federal funds, the PPPs, they could push you into a new 990 form, but they do not spur an audit. So thank you all for coming out today. This was my first presentation, so a little bit of new experience for me, and hopefully you learned something today, and I was really happy that you came. So thank you so much.
Thank you, James. You did a fabulous job, and we sure appreciate you sharing all your expertise. And thanks to everybody that joined. Look out for an email from me with a link to the recording and the PowerPoint slides that will also have James's contact information included in those if you need to reach out after the event. Thanks, and have a great day.
Thank you.